Wall Street has perked up. The US dollar is losing its grip. Investors are getting an appetite for risky assets. And let's discuss what has changed in the market sentiment. The US stock market eventually halted its protracted losing streak and opened a new quarter with confident gains. The Dow Jones jumped 760 points, or 2.66% yesterday. When down by gloomy Tesla forecasts, the Nasdaq closed with the smallest gains of 2.27%. The S&P managed to recover 2.59% to close at 3,678 points. Despite cautious optimism among investors and pessimistic analysts, Wall Street opened in the green today. The major stock indexes traded higher in the New York pre-market. The S&P is expected to trade in the intraday corridor between 3,640 and 3,820 points. A strong rebound does not mean a trend reversal. Nevertheless, the market found enough reasons for optimism on a Monday. Wall Street benefited from the US dollar's weakness, a decline in the yields of US Treasuries, and the fresh macroeconomic data. The market also cheered the fact that the British government cancelled the plan on tax cuts and the fiscal stimulus. The news was announced by the new UK Chancellor of Exchequer. The data on the US factory activity showed that the manufacturing sector expanded in September at the slowest pace in almost 2.5 years because new factory orders contracted amid the Fed's aggressive rate hikes. The ISM MANUFACTURING PMI slipped to 50 points last month, the lowest reading since May 2020 after 52.8 in August. The actual score is much weaker than the expected 52.2. Experts say that the drop in the index means that companies are braced for the potential decline in demand in the future. In a separate report, the employment in the manufacturing sector went down last month for the fourth time since this year. Besides, the Commerce Department reported on Monday that construction spending tumbled the most in August in the last 1.5 years. Such data proves that the US economy is cooling down. Indeed, rising borrowing costs are bringing down demand. Still, it's too early to expect the Fed to soften its rhetoric, bearing in mind it's a commitment to the struggle against high inflation. This week, the economic calendar is full of reports on the US labor market. Meanwhile, the stocks of the companies with a mega capitalization are also poised to grow. Shares of Apple, Microsoft, Amazon, and Meta are making promising moves higher. Even Tesla stock rebounded 3.6% in the pre-market following a big sell-off yesterday. Shares of the high-tech giant plummeted 9% on Monday in light of dismal data of quarterly deliveries. The US dollar is taking a back seat now. Its index settled at about 111 points, the lowest level in 2 weeks. The index has dropped almost 0.6%, and the intraday corridor for the index is seen between 110.60 and 111.50. The US dollar is trading lower on Tuesday because yields of the US Treasuries went down, thus giving brief relief to stock markets. The pound sterling and the euro have grown 0.45 and 0.50% respectively. The yen retreated from the landmark level of 145. The red-hot data on the US factory activity calmed down investors, though the Fed's policymakers insist on the sharp rate hikes as a countermeasure against inflation. Federal Reserve Bank of New York John Williams said that despite signs of a cooling down, the core CPI remains elevated. This assured the Fed to go ahead with aggressive monetary tightening. Later on Tuesday, the market will digest remarks by other Fed's policymakers such as Philip Jefferson, Loretta Mester, Mary Daly, and Lori Logan. The Canadian dollar retreated today. The USD card pay is creeping upwards following a rally on a Monday. And the currency pair is trading at around 1.3649 within the intraday corridor between 1.3570 and 1.3710. The loonie opened the week with a confident gains amid the US dollar's weakness and ahead of the highly anticipated OPEC summit. The cartel and its allies are holding the summit on Wednesday and are likely to scale down the oil output by more than 1 million barrels a day. Some participants might decide on extra output cuts. Commodity markets are set to trade under high volatility until the summit. The USD CAD pair will be driven by expectations. Previously, the benchmark oil grades rallied 5% and 6%. Today, Brent crude futures rose 2.30% to trade at $90.90 a barrel. WTI futures climbed 2.10% to trade at $85.39 a barrel. The crypto market also perked up in tune with the overall optimism. Amid growing appetite for risk, Bitcoin is trading in the opposite correlation with the US dollar index and in a sync with the Nasdaq and the S&P500. The token has recovered 1.70%. At the same time, the flagship crypto is not ready to exit the wide trading range, though it's following the dynamic of the stock market. Bitcoin needs fundamental catalysts to extend its growth. Altcoins are more inclined to develop a rally. Ethereum has jumped more than 2% to 1.35 and 10. Solana, Ripple and Litecoin are also trading higher. Bitcoin has a good chance of breaking the landmark level of $20,000. If the token is able to surpass it, it could rise to 20,500. Otherwise, the crypto could get stuck within the border between $19,800 and $20,100. The odds are that Wall Street will have another optimistic trading day on Tuesday. However, don't forget that markets are sensitive to bad news, so that they can reverse immediately anytime. And we wish you gainful trades with the InstaForex and see you online tomorrow.